Welcome back to our channel, Oahu Homes. I'm Ashley. This is Shannon. We're local real estate agents here on Oahu. We're powered by Turnkey Group at eXp Realty.
If you have any questions or are interested in anything having to do with real estate here on Oahu, please find our contact information in the description below. We'd be happy to work with you. Please enjoy today's video. All right, hey guys, welcome back to our YouTube channel. We're sitting here today at Align Mortgage with Ben Fransen and Tony Diaz.
My name is Ben Fransen. I'm a senior loan officer here at Align Mortgage. I've been in the mortgage industry for almost 3 years now. So I've got to experience the highs and lows of the industry, super low interest rates and relatively high interest rates. So been through a lot. Previously worked for the DOD, and before that, it was in the Army as a Korean linguist. So got into the mortgage industry after almost a full career in the DOD. So it was a bit of a switch, but I love what I do, and I'm here to serve veterans.
And I'm Tony Diaz. I'm the steward of Align Mortgage. Align Mortgage's mission is to ensure that anyone who's ever served our country has an opportunity to own a piece of it. Our end state says that we will affect change in this country and how veterans are served, and we do that through our education piece, which we offer free seminars for veterans so that we can empower them to be able to utilize a benefit that can change their lives.
Why did you guys choose, or why did you choose this career?
Why did I choose being a lender? When I was 17 years old, I was really great at math, and I had a boss that had a girlfriend that was in the mortgage industry, and she would come and to lunch with us and test me on figuring out calculations of mortgages, and she'd teach me how to use the HP calculator, and I found it very interesting. But at 17, in order to become a loan officer, she said I had to go to college, and I did well in school, but I didn't like the structure of school.
Yeah.
So instead of going to college, I decided to go in the Marine Corps, which I served 4 years in the Marine Corps, and then got out, went to work for Radio Shack for 6 years, car dealership for 6 years, a general manager. And then finally somebody gave me the opportunity to be a loan officer, and I was their top producing loan officer for 5 years, started in 2003. I started educating veterans in 2005 and opened up Align Mortgage in 2017.
Yeah, I was a longtime DOD civil servant after a 5-year stint in the Army as a Korean linguist. And the position that I was in required me to travel quite a bit. And I've got 3 kids, that are all kind of elementary age, middle school aged. And the travel just got to be too much. I was gone at least, 3-4 months out of the year. And it was a lot to ask my wife to handle the household and handle the kids while I was off in Korea working. It was an awesome mission to be part of, but ultimately I needed something to do that would allow me to stay home and not miss out on so much. And Tony saw something in me and told me about what it would take to become a loan officer, and encouraged me and gave me an opportunity, and never looked back. And I absolutely love what I do.
He was a client of ours,
Yeah,
who's now owns 3 houses, going on his 4th one.
nice.
So, dude, you believe in what we do. You can explain it to people. Why don't you just come be a loan officer with us, and hopefully it'll change your life.
And it has.
So I wanted to just ask a couple questions about the VA loan and some of the myths behind it. So one question we have for you guys is, can you use your VA benefit more than once?
The easy answer is yes, you can. Now, sometimes there's stipulations where, depending on how much you use it and whether or not you still own that property, you might be out of entitlement. But there's certainly ways that you can get your entitlement back. There's also a thing called second tier entitlement, where if you buy a property at less than the county loan limit, and you have what's called second tier entitlement, basically the county loan limit minus whatever your original loan was. So you could use that to purchase another property. And if that's not enough to cover it 100%, you can come in with a little bit of a down payment. If the difference between what your remaining entitlement is and the purchase price is $100K, you come in with a 25% down payment on the $100K. So you come in with $25K down, still have a VA loan, no private mortgage insurance, and you get the better interest rates that come with VA loans. So yeah, you absolutely can. And you can also buy a house, sell that house, and have your entitlement restored in full, unlimited times. So you can you definitely use it more than once.
Yeah, one more option is that if a veteran has bought that house and kept it for a while and now has over 20% equity, they can refinance into a conventional loan and get their full certificate of eligibility restored again. and go up to whatever the limit. There's no loan limit anymore, right? Which when you have a full certificate of eligibility. So the sky's the limit if they refinance out of the VA loan.
I also learned recently that if you're not using your full entitlement, you can also have 2 properties without refinancing.
Yes.
Right. So that's where there's full certificate of eligibility,
Yeah.
which means there's nothing encumbering on the certificate.
Mhm.
And there's partial certificate of eligibility. So like say your client bought a $300,000 condo
Yeah.
and the loan limit's $1,089,000, they would have $789,000 they could use,
Yeah.
100% financing. Now, if they wanted to go up to $889,000,
Yeah.
they just put down the 25% difference.
Okay. So how can you save money using the VA loan?
First of all, there's no down payment required.
Mhm.
So the money that you would have had to put down as a down payment on some loan programs, you keep in your bank. So you're saving that money.
Yeah.
You can invest that money elsewhere
Mhm.
as opposed to putting it down on your house. Another way that you save money is you don't have to pay any private mortgage insurance.
Mhm.
There's a VA funding fee. Some people are going to be exempt from that VA funding
Yeah.
fee. Others will have to pay it, but it's rolled into the loan. It's factored into the loan, so you're not actually paying it on a monthly basis. It doesn't calculate the same as private mortgage insurance, although it does kind of act like private mortgage insurance. But there's a limit to the number of fees that you can charge on a VA loan.
Okay.
And as far as origination, and we don't charge any lender fees.
Mhm.
Our company has chosen not to charge the veteran any lender fees.
Mhm.
I'll let Tony tell a little bit about that and why we do that.
Yeah. For me, the men and women that are serving our country, they sacrifice a lot.
Mhm.
And it's not just the person wearing the uniform, but like my mom is my superwoman. 10 years my dad was deployed, and 10 years she raised 4 kids by herself.
Mhm.
Once the permanent change of station. So the family is sacrificing. Me as a dependent, I changed schools 11 times in 13 years. So as a
Wow.
kid, I sacrificed. So the least we could do is try to make purchasing a home as easy as possible for them. So we do the education piece first to empower them with knowledge, and hopefully then they'll take action. And then we give them a coupon for attending the seminar, it's
Mhm.
$500 towards their closing costs. And then we don't charge lender fees, so processing fees, underwriting fees, tax service fees, origination fees. We don't even charge them for a credit report and a flood certification that's required to do the loan, only to make it easy for them to get into home ownership. That's it.
How can you be exempt from the funding fee? Is that what you're saying? Okay.
Yeah. So the VA funding fee is kind of like the VA's version of mortgage insurance. Basically, when you get a VA loan at 100% financing, the VA guarantees the lender that if you default, they're going to help them recoup 25%. So that's what that funding fee funds. It funds that coverage. Now, everybody that uses the VA loan for a first time use, the VA funding fee is 2.15%, and then for subsequent use, it's 3.3%. Now, refinances, cash out refinance is usually 3.3% unless it's a first time use of the VA loan cash out refinance, and it's 2.15%. Streamline refinance is 0.5%. But if you have any service connected disability, if you receive compensation for a disability associated with your time in service,
Yeah.
and you're approved for that through the VA, you're exempt 100%
Yeah.
from the funding fee. You never have to pay a funding fee.
And for veterans who haven't been rated, it is never too late to get rated. So we educate them in the seminar about that too. They can go to archives.gov/veterans, and they can request their DD-214s,
Mhm.
personnel files, and medical records all for free.
Okay.
And then they take that information once they have it, and they can go see an advocate. We know a bunch of people who serve veterans. We're walking them through the rating process. We've helped so many people go from being 0 rated to 100% disabled
Yeah.
veteran. And the city and county of Honolulu, if you're a 100% disabled veteran, you only pay $300 a year in property tax, whether you buy in Waianae or Wailaiki. It doesn't matter. It's $300 a year. So those kind of things can change a veteran's life.
Yeah.
Just getting re-rated.
In your personal experience, how can you build wealth using a VA loan if you were to be just talking to like a room full of veterans right now?
We've educated over 175,000 veterans in our career. And out of those, I know personally 5 that are already millionaires because of the equity in their homes that they have bought over the years. So utilizing the VA home benefit, buying your first home, you can, if you didn't buy up to the loan limit, you can use second tier entitlement and buy another home. If you sell the first home later on, you get that restored and you can use it again and again and again. If a veteran is dual entitled, the spouses are both veterans, they have 2 certificates of eligibility, and they only have to use one at a time, and then they can combine the 2 later on. And that works the same way with 2 veterans. So 2 veterans buying homes together, they'll split the entitlements on their certificates, but then they can continue to use and use and use and use. So over the years, Ben's situation, I'll let him tell his story, but Ben is one of those living, breathing examples of how a veteran went from not owning anything to now owning 3 homes and has $1 million of equity.
It started with the first one. My wife and I both served, so we did have 2 certificates of eligibility to work with. I believe we used my certificate of eligibility for the first home that we purchased. We came to Tony's seminar, and we were encouraged, and it gave us the knowledge and education piece that was missing. That they gave us the confidence to, kind of take that leap of faith and buy a, multi-$100,000 property. Yeah. I grew up in Northern Illinois where $100,000 is a lot for a house. Yeah. So coming here, we were looking at Mililani as first-time home buyers, and that wasn't going to happen. Not at that point, but Tony kind of taught us, like, hey, get in where you can get in and be comfortable. Yeah. You'll get to Mililani. Start small. So we bought out in Waianae. We bought a brand new single-family home out in Waianae, and it was our family's first home, and we lived there for 6 to 7 years, somewhere like that. It was our primary residence, and then we decided, you know what, this commute's getting to be a little bit rough. So we looked into purchasing another property. It's closer to Central Oahu. We ended up talking about it, and we're like, you know what, instead of buying our forever home right now, let's buy another property that will make a great investment property. So we used my wife's certificate of eligibility at that time, and we purchased a townhouse in YPO. It was enough to, to work for our family. It reduced our commute. The VA didn't mind because even though the square footage was less, the location was better. So that was an upgrade in the VA's eyes. So we lived there for only about 2.5 years before, like, okay, time to get out of this cramped little townhouse. Let's combine our remaining entitlement. Like Tony said, we both had second tier entitlement remaining. We combined those, and we had almost enough to finance a Mililani home at 100% financing. We did have to come in with a little bit of a down payment. I tapped into my TSP to get those funds to cover that 25% down on the difference. We bought in Mililani. We got our single family home. That's where we live now. Both the Waianae property and the YPO property are rented out, and they have been rented out since we moved out of them. We've never not had a tenant in there. So those balances are getting paid down by tenants primarily. And actually in the process now of assuming a VA loan, where a veteran is selling their home that they bought and that they have a 2.25% interest rate on. And we're going to assume that loan, and we'll cover the difference in the purchase price between the purchase price and the assumable loan amount with cash, which is another way that veterans can get into home ownership. So it all started with education. As Tony said, if you look at the value of the homes that we own now, and the loan balances that we have on them still, there's over $1 million in equity, and that's how millionaires are made. It's through real estate. And it's not like I've got $1 million in my bank account and I'm driving a Ferrari or Lamborghini or anything like that. That's not what being a millionaire is about, but it's about what you're going to be able to leave your family someday. So
the biggest thing that we have to overcome is, first of all, we need to understand who is a veteran. Majority of us are recruited from places that aren't the richest places, like Hawaii Kai. They're not recruiting a whole lot of kids on Hawaii Kai to go be Marines or soldiers. They're going to Waianae and say, I got something for you, young man. I'm going to get you out of here. You're going to get an education. You're going to get to see the world. You're going to make some money, right? But they never change your mindset. Like where I'm from, we don't buy houses. We live in them. Rich people own the houses. We just live in them and rent them. I had to have my mindset changed that I can own a piece of this country that I've defended. And that came from reading books, right? Like Rich Dad, Poor Dad, The Richest Man in Babylon. Millionaire Next Door, all these books that empowered me to realize that, hey, I can do this. And so in our education piece, that's our first mission, is to just change the mindset of the veteran that says, hey, maybe this isn't for me. I don't think I can do this. It's too risky. It's too this, it's too that. But in reality, we can avoid risk if you analyze how to buy homes the right way versus the wrong way. But the first step is taking the initiative to go learn as much as you can so that you can overcome the fear that you have, right? Because that's what they have. They have this undeniable fear of, I don't want to make a bad decision. And trust me, I didn't want to either. But if I never bought the first one, I wouldn't be to where I'm at today. The other thing that because they think it's risky, they say, well, I don't want to have a mortgage. And unfortunately, we have to let the veteran know that you have a mortgage. It's just not yours.
Yeah.
You're paying somebody else's house off, especially with this tax-free income that you're getting while you're on active duty. It's called BAH. You're taking this money and paying off somebody else's mortgage with it. And at the end of your 3 years, let's just say you had $2,500 a month in BAH. You're talking about $72,000 that you never see a penny of that money coming back. And now you get to buy at a higher value, right? So values of homes are secular. They go up, they go down a little bit, but they don't go down to where the lowest point was years ago. And then it'll go back up again, and then go down, and then go up again. And it's like a peak, right, of a mountain. But if you take too long to wait to buy, you're wasting your BAH, you're wasting your rent money on paying off somebody else's mortgage and not building the equity that your family's life can be changed by changing the legacy, right? So first thing we got to do is empower them with the knowledge.
May we ask how many properties you own?
So today we have our house in Mililani. It's worth $1.5 million. It's paid off. We have a condo that's worth $400,000. That's paid off. We have a house in San Antonio, Texas. That's worth 1.5 now. We bought for 1.35. We rent back to the developer as their model home for $13,500 a month. It's a lot.
Wow.
And then we have 83 acres with 2 4-bedroom, 3-bath houses with swimming pools, a 2-bedroom, 1.5-bath casita, a hangar with a 1-bedroom apartment, airstrip, and a partridge in a pear tree. We have 2 buildings, one that's worth over $5 million, the other one is worth over $2.2 million in San Antonio also. So it started with a $190,000 condo in Launani Valley.
Wow.
In 2001. That's how it started. A single condo. And when I went back to work, my boss didn't give me a raise to help me pay my mortgage. He thought, man, you're going to work your butt off now because you got to pay off this mortgage. And he was right. I did have to work my butt off. But that first house made me realize that what am I afraid of? Because we lived in it for 1 year, rented it out. I was making $500 more in rent than I was paying in a mortgage. And then we bought our house in Mililani in 2002. And it's 2023. It's not even 30 years, but it's paid off.
Yeah.
Because we rented it out while we were in Makakilo. So all these houses gave us more and more ammunition. And that ammunition is, while things are increasing in value, someone is paying down your mortgage. So when you sell, you're going to end up having this equity that you can go do all kinds of things with.
Buy buildings in Texas. So what is your best advice for younger people that want to get into investing?
Number one, learn as much as you can about real estate. Attend a VA seminar. Then, if I were you, I would decide to start with something small that can fit your family's needs, that you know that if I couldn't sell it, can I rent it out, and can I afford to pay the difference if there is any in rent? If the answer is yes, then buying the house makes sense. But if the answer is no, then you shouldn't buy that house. You should continue to keep looking and keep looking and keep looking. This isn't a get-rich-quick thing. It took me 22 years to get to where I'm at. But 22 years has gone by like that. I can't tell you. But the thing that is going on today, because we teach all the time and we ask them, interest rates are what? And everyone says, too high. Compared to what exactly? To your rent? You know what your interest rate is on rent? 100%. It's 100%. All that money is not going to nothing that you have. So you're paying 100% to somebody else, but you're not going to get anything back. And if your interest rate was even 7%, you have protected on the VA loan. If interest rates should drop to 6, you can streamline refinance. If they drop to 5, you can streamline refinance. If they drop to 2, you can still stream. There's so much protection for a veteran that the risk kind of goes away if you just learn how valuable this benefit is.
One other thing I would add is once you've kind of gone through the seminar and you've made that decision, you understand how it works, and you made that decision, okay, get connected with a knowledgeable lender that can help you work through your budget, that can help you figure out the price point that you need to be targeting to get into home ownership. And then get connected with a VA knowledgeable realtor like yourselves who can find a property that meets that family's needs, that fits within their budget. As long as you're doing those things, it's really difficult to fail.
Most people will say, well, I'm not ready to buy a house yet. I'll come see you when I'm ready. And I asked them, when you were in the military, did you start getting ready right before you had to go to combat, or were you training this whole time to be ready to when you had to go to combat? Well, I was training all the time to be ready. That's right. So shouldn't you get ready now, get pre-approved now, see what you qualify for, and if something's wrong, we're going to build a bridge, a roadmap to get you to where you want to be, which is home ownership. But if you wait until it's time, what if there's something wrong then? Now we're going to have to wait longer and help you fix it, right? So better to find out factually right now. Again, the consultation is free. Ben will do a free consultation, sit with them, find out exactly what they qualify for. And if they buy, they buy. If they don't, we'll see you when you're ready, right? But at least you know factually that you can buy a home, right?
Yeah.
When I was actually in the process of buying my first home with my wife, our credit wasn't where it needed to be. We had some work to do.
Yeah.
We had some debt to pay off. The loan officer that we were working with helped us with that. And I do that for my clients too. We figure out what your goal is, where you want to be, figure out where you're at factually, financially right now, and help you build a bridge to get where you want to be. You never know when that opportunity is going to arise. I had a client that came to me thinking that it was going to be at least a year before she was going to be ready, but she sat through the seminar and she's like, all right, well, let's see where I'm at. Tell me what I need to do. I'm motivated. I want to buy a house within the year. I'm ready to do whatever you tell me. I know my credit's not where it should be, but I'm ready to work. So we looked at everything and got her pre-approved. Yeah. Like, her credit wasn't the greatest, but it was good enough. And getting into the type of home that she wanted to was feasible. Within 2 weeks, she was under contract. And within a month and a half, she was closed from attending the seminar. And she bought a place. She didn't need much. She's got some disability income, exempt from the funding fee. We were able to get seller credit to cover all of her closing costs. That's something you can do in today's buyer's market that you couldn't do when rates were really low. So you're waiting for rates to go down. Well, guess what? You better have some cash saved up because you're going to pay your own closing costs, chances are, unless you use lender credit. But then you got to take a higher rate to get the lender credit. So it's like, where do you really want to be? This is a market where there are absolutely opportunities. Yeah. And there are opportunities in every market. It's just working with somebody that knows how to take advantage of those opportunities to get into a situation that, allows you to accomplish your goals.
What is the lowest credit score a VA buyer would need?
Technically, VA doesn't require a credit score. Okay. So it does, but lenders do, right? Okay. So every lender has what's called overlays or restrictions on the VA guidelines. So some are 580, some are 600, 620, 640, 660. Okay. Ours is 580. However, with extenuating circumstances, we've gone below 580. The lowest I've ever done is a 480 FICO score on a veteran whose ex-wife messed him over while he was on deployment. And it wasn't his fault. We proved that it wasn't his fault. We proved that he had great credit before he went on deployment, and the underwriters gave us the approval so that we can move forward with it. Because it wasn't the veteran's fault. Before he went on deployment, perfect credit. Then somebody took advantage of him and messed him over, but it wasn't his fault. So he made restitution to the credit card companies that she opened and never made a payment to, paid them off, and so we were able to get that exception. So FICO scores, 580 is our minimum, but we have gotten exceptions done. You ever have clients who get denied by a lender do the debt to income ratios.
Mm-hmm.
The VA loan is not a debt to income ratio loan. It's a budget-based loan.
Okay.
So certain things skews a debt to income ratio. For instance, BAH, non-taxable income, right? BAH, BAS, COLA. That's all non-taxable income that can skew a debt to income ratio.
Mm-hmm.
Same thing with disability income. It's non-taxable. So some lenders have a 41% debt to income ratio, 45, 47, 50, 55. We don't have a debt to income ratio. The highest one I've seen us do so far is 74%. And that seems kind of crazy. But both veterans, one was active duty E8, making over $5,000 in non-taxable income, and the spouse is a 100% disabled veteran, making over $5,500 in non-taxable income. So well over 10 grand in non-taxable income skewed their debt to income ratio. As a family of four, VA said they had to have like $1,341 in residual income left over after all their bills are paid.
Mm-hmm.
Well, this couple had over $4,000 in residual income and was denied by 3 other lenders. So if for your clients, make sure they know, don't let a lender tell you you can't do something. Always get a second or third opinion,
Okay.
especially if you're not going to use us. But if you're using us, even Ben tells you you can't do something, go get a second opinion still, right?
Yeah.
Because everyone is different. But I know that we look at the VA guidelines when we say no, because our only overlay is FICO scores.
Thank you guys so much for answering all of our VA questions, and it was nice having you, Tony and Ben.
Yeah, thanks for having us. And if you're watching this and you've got questions, please put them in the comments. We'll try to get them answered. You can reach out to me. We'll make sure that my contact information is available. You can reach out to Ashley or Shan.
Yeah.
And we'll get you taken care of.